Hello, and welcome back to the Nearsight and Farsight podcast. I'm your host, Kevin Taylor. We're going to discuss a couple of the different changes that we've made to the portfolio that I think are pretty exciting and show that we're just being a little bit more reactive to the market through these summer months. The first thing that you're going to notice is that we've taken some of our articulation towards technology off the board. We've seen some great run-ups on a lot of the different names over the last couple of months, and we want to take some chips off the board, take some profit for our shareholders. The second thing that we've done is we've added a couple of names that might sound like I'm contradicting myself from conversations I may have had to the past. We've got an answer to crypto, and we've got an answer to inflation that we're going to discuss in this. And finally, we still have UPS on our radar, and so we're just waiting for a better price point to re-enter that stock. So we go into those details. Thank you very much. So one of the first things that you're going to notice in the changes that we've made pretty much across the board in our portfolios is we've lightened the weight a little bit in technology. It's had a great run up. We're starting to see it move north and south with a relatively high frequency, which generally just says that it's gonna trade inside that zone. But it's also getting just a little bit more expensive than we like it on the whole. So a lot of the technology names we've taken out of the portfolio, and we'll talk about some of the other places that we've added to. One of the next things that you're going to notice that we've finally added into the portfolio is a little bit of more deliberate exposure into cryptocurrency. We've kind of waited for the Coinbase IPO to flush out the weak hands, to flush out the people that wanted to sell it. And I think we've seen this company settle into a pretty solid base and a more fair price point. We still think it's a little expensive, but I do believe that this company represents kind of the backbone of crypto technology. If you've heard any of our other podcasts where I've discussed, Bitcoin or Ethereum, or we've talked on the phone about those things, you'll know that I'm not a big bull on using and storing crypto as a delivered asset. And the last couple of weeks, Bitcoin has proved that it's not as resilient, and it certainly can't bear the weight of being the world's reserve currency or a store of value like gold can. And so the reason that we like Coinbase is it's going to operate more as a marketplace. So as people are buying and selling Bitcoins or buying and selling Ethereum or other forms of cryptocurrency, Coinbase can operate as a platform that both charges entrants to participate in that marketplace, but then it also captures some of the margin as those assets are traded back and forth. So while we still think that this is in that space, for me, it's the guy selling hammers and shovels, or really more even the guy listing the hammers and shovels for sale that's making money in this space. So we think that the long-term prospects of something emerging as a dominant electronic form of currency is still going to happen. We think in the near term, the best way to make money off of this transition is off the people who are selling seats at the table to even traffic in those goods. And it's pretty agnostic, even though it's largely exposed to Bitcoin and Ethereum 1 and 2 in their holdings and where their revenues come from. It's pretty agnostic. So if there are other dominant cryptocurrencies that present themselves, there's nothing that stops Coinbase from adopting and creating products surrounding those as well. One of the second things that you'll notice is that we've added a couple of different ETFs that should help us, and ETFs in one stock that should help us combat inflation, but still kind of marry us with some of the technology backbone stuff that we've always liked. So we have added an international momentum ETF, and we have added metals and miners for their inflation and kind of as a hedge against the United States. So if we continue to print dollars, those two should be areas in commodities and emerging markets that should stand to benefit because of their connection with commodities. So, and the other reason that we chose those spaces to be our inflation hedge is because of copper. Copper is going to be a huge part of how we continue to construct technology. It's still a backbone resource for those industries. And so we still want to be pretty closely tied to the extraction and the consumption of copper. And then if it's also a commodity that's inflating over the next 6 to 9 months, then we think that that's the right place to be. Now, the other place that we have added is in the Digital Realty Trust. Now, this is an individual company. It's a REIT, real estate investment. And what they do is they house big processing vaults, big processing facilities for things like the cloud. Mining can be done in them, but really what they are is they're just the ground of the cloud, if you will. These are the buildings where the cloud lives. And so these are huge data warehouses and huge processing facilities that have major exposure to chips. They bring those chips in, they mount them up, and then they rent out that digital space to providers. So Digital Realty Trust is the real on the earth footprint for what we think is a big growing piece of that technology, and still pretty inflation resistant. Because it's also a real estate, they should see their real estate exposure should inflate as part of our inflation hedge too. Thank you very much. This has been Nearsight and Farsight. I've been your host, Kevin Taylor. We hope you've enjoyed this update on what we're doing in the portfolios. As always, if you have any questions, please contact Peter Locke or myself, and we will help guide you through this. Thanks.